Hey everyone, stick with us versus herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. If you want to join us live every Monday through Friday, 30 minutes before market opens, I go live on Options Trading Live, our other channel. Link is below in the description. And if you want to join the UVH fam, our community, link is below in the description as well to our Discord and our options trading group on Facebook. If you made money today, comment below, got paid. If you lost money today, comment below, learned a lesson. And if you could do me the favor, hit the like button. I would really appreciate it. It really helps out the videos and pushes them a little bit further. So I really appreciate it. Today was obviously another crazy day in the oil markets. I'll walk through my trades here and then we'll talk about where I see the market heading. I closed the day up a little bit over $700 in realized profits, and I'm looking at a couple other trades here that I'll put on that I'll walk you through. But I started the morning off, closed out Home Depot. Home Depot was a big winner, hit my targets. I was playing if you look here on the Us versus Herd Impact Report, what I have here, what I was playing was the this week's economic reports, and I was looking at the existing home sales. I knew that they were going to be terrible, and they were, which pushed Home Depot down to 200. My target, I shorted it yesterday, right up in here. It was like 208, 209 area, and my target, I didn't think it was going to I thought maybe today would be like 205, but we opened at 200. It actually pushed down to 199, so I made that 510 profit off of that report. Pushed Home Depot lower, as you can see here. If we look at the trades here, so I bought that for 580, sold it for 1090, so it was a nice, healthy 100% gainer today. And then for Visa as well, I shorted Visa yesterday, not VIX, Visa. Made 160 bucks at open, bought for 415, sold it for 575. So Visa, really what I was targeting there as well was another drop. I shorted it yesterday. My target for the week was 160, and we hit that earlier in the week. We hit that area. I took the trade off because I hit my targets, and it definitely could have bounced from here, and it did bounce up a little bit, even though Visa and Home Depot were relatively flat. Goldman Sachs, I actually made $2 on. Now Goldman Sachs, I actually had a debit spread on here. I had the 170 put, and I was short the 160 put for next week expiration. I was actually down a couple $100 at this at one point because Goldman Sachs, they kind of bucked the trend. Goldman Sachs went all the way up to 186, and then today I closed it out when it was like 174 area because I thought, hey, this could bounce up. It never did bounce up, so I do think that it's probably going to revisit the 170 area. But I really wanted to get out of the trade because that was almost a max loss trade, and it came back into the green. So I'm like, you know what, I'm done fighting with Goldman Sachs. I'll wait for the next setup. If I want to trade Goldman Sachs again, I'll wait for the next setup. Some people are like, well, if you waited this long, maybe wait a little bit longer. Sure, I could. Definitely could, but a lot of time has gone by, and it's a debit spread. So, theta's gonna be impacting me pretty hard here relatively shortly. So I wanted to get rid of it as soon as it came back into the green. So I'll take the money and redeploy it, and that's what we do. We take profits and we redeploy the capital, and that's what I did there. And then IBM actually came out pretty clean on it. I made $55 on that. Now IBM, I had a at the money iron condor. I was shorting the 120 put, 120 call with $10 wide wings. I got a 670 credit. And this morning, what was interesting this morning is I wanted it to be my bottom was like 114 area to break even. I actually closed out when I was like 113.50, and it dropped all the way to 112, where I would have been definitely losing money. So I was actually surprised how much premium came in. I thought when it opened this morning, it opened like 114. It was right at the bottom, and then was pushing lower as I was closing that trade out. But surprisingly, implied volatility really came in on that trade, even though it just dipped a little bit. It really crushed the premium, which allowed me to get out of that trade. But it was a really nice, safe iron condor, for earnings. USO. So let's talk about oil for a second. So USO played a little defense here. I'm short the January put I'm long the 5-strike call for January as well with my initial trade. Right now that's down $99. And USO was halted, I don't even know how many times today. I mean, it was like halted twice before the market even opened. USO dropped from, 370 yesterday all the way down to 223 pre-market, ripped back up to 340, came all the way down to 230, and now it's settling in around 287, where USO, they had to make a ton of adjustments where they're rolling out contracts and they're doing all this thing. So basically what they're trying to avoid, USO is trying to avoid, is blowing up the fund. They want to keep the fund alive. They don't want to blow it up. And the rate that it was going, we saw oil, and this is for June. June came all the way down to 650. It popped back up to 1312. Yesterday it was trading around 21, came all the way to 650. So when May closed out, actually May actually popped back up to positive. May contracts, if you guys remember yesterday, actually hit negative $40 a barrel. They actually popped up to $9 at close there on May. But now June is what's trading, and June is at 13. So we got to be careful. So to kind of combat those positions here, I opened a 3.5 put for this June, which is up a little bit. I was up a bit on this May put, but premiums really got crushed at one point. IV was up to 500%, and right now it's only up to it's still pretty high, 300, almost 400% for this week. But IV really expanded and was, at one point, this 3 put was up like $100, I believe, or 100 and maybe like $80, somewhere around there. But now it's down 30. So the main point of this is to, if this does blow up, does go to zero, I'll have some options here to get out of my short put. Mostly concerned about this short put. Don't really care about the 5-strike call, even though that 5-strike call is only down just 15%. It hardly even budged. Like most of the day, that 5-strike call is only down like $5. So we'll see what happens. It was a bullish position, but now we're playing a little bit of defense with these puts. So that's kind of how we're trading that right now. I'll talk about SNAP in a second, but for SPY, I just want to touch on SPY real quick. I mean, we saw a 3% down move today on SPY, and I wanted to point out it's pretty interesting how it smacked this 50-day, and it got rejected 2 times. It got rejected twice on the 50-day moving average. If I move in here, you can see that. So I definitely think that we're going to probably be, it did, what's the lowest today? 272. I definitely do think that we're going to come down to test the 270 area and potentially the 265 area. I don't know about this week. I think it may want to try to push back up to the 280 and then try to drop a little bit. But with these massive moves in oil, it's not going to be good. It's not going to be good for the overall market. And if oil goes, if the June expiration goes negative, I mean, we're gonna have some trouble. Definitely gonna have some trouble. So, so right now I'm just being real cautious in what we're doing here, not holding too much. I am playing a little bit of earnings. I am in SNAP earnings, and I'll go over my trade here. SNAP stores on strong revenue growth, which is pretty surprising to me because I've been saying, hey, I think advertising is going to be way down, blah blah blah. But obviously I could be wrong. Obviously I was wrong, and that's what happens. Sometimes. And that's what happens when you play earnings. Sometimes you could be wrong. But Snap on Tuesday announced its earnings results for the first quarter, sending its share prices up as much as 20%. Revenue came in at $462 million, up more than 44% from the $320 million the company reported in the fiscal quarter of 2019. They lost 8 cents per share. Daily active users are up 39 million, up 20% from last year. So overall, pretty decent for Snap. I mean, even though they're a very, 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 very small company when it comes to Facebook, they're moving and shaking, and that's why they're currently up 20%. Now, what I did, because IV was up so much on Snap, let me just pull up Snap here. So IV was up 244% this week, 163% for next week. I did go short. However, on this week, I did go neutral, which probably is going to cost me a little bit of money here, but because I'm thinking premium was so rich, I actually might come out okay on this. I did, so outside of the iron condor, I did buy one of the 1250 puts, so that's why it kind of looks a little bit weird. So I made an iron condor, and then I bought a 1250 put because I thought, hey, this is probably going to go down. What I was targeting on Snap here was it to hit the 11 or 12 area. So I added that put for a little bit of value add there. And let me just show you here real quick on the curve. Let me just take off some of these positions and just put on the iron condor so it makes a little bit more sense to you here. So this is the iron condor, and premium was really rich. So let's say it's IV's at 243%. Let's say it just comes down to like 190% tomorrow. You know, premium is going to get crushed pretty good. So what I'm looking at right now is it's at like $15 on this iron condor. I'm probably going to lose like $10 on this iron condor. However, I'm going to lose on that put, that 1250 put. So I'm going to be losing on this 1250 put here. I'm going to be losing, at $15, I'm going to be losing $98. So I'm already down $100. Not so good. Definitely not good. Definitely not what I wanted to do. So I'm down $98, which is pretty small. When I do trade earnings, I go small. I don't bet the farm. $100. I made $700 in profit today. I can afford to lose $100. But this is where things are going to get a little dicey for next week expiration, which I'm going to probably hold to see if Snap can come down a little bit. I sold 2 call spreads, as you can see here. I sold 2 call spreads at the $3 wide call spreads. This is the one that's going to hurt. So this is the one that's going to hurt. Tomorrow, if it sticks around $15, this is going to be down. I'm going to be down like $150. So I'm going to be down about $240 on Snap because it went down. I do think that it's relatively safe. Let me see what happens when we take out a little bit of premium out of this. So if we have a little bit of premium crush tomorrow, say we take it 40% on next week. If we take 40%, okay, so the 15 is probably it's even worse. So I'm gonna be down because that long call is not going to be paying out as much because the implied volatility is going to go down. So going to be down. So looking like I'm going to be down about 250, 260 tomorrow on this position. But we'll see where premium comes in at. If they really crush premium, we might actually come out of this. I wouldn't say with a profit, but with not much of a loss. So we'll see what happens with Snapchat. But I was definitely wrong about Snapchat, but because I sold so much premium and I didn't really go long any premium, so I think that we might be okay on that for Snap tomorrow. I also put a position on XOP. So XOP, if you don't know what that is, you can look it up on ETF.com, look up XOP. But I am long the 44 put for May expiration, 24 days out, down about $25. And what was interesting to me today on XOP, let me just pull this up here. Oil was getting slammed. I was playing this 44 rejection here. It got rejected here yesterday. It got rejected again today. So that's why I bought the 44 put. And then I set an alert saying, hey, if it goes above 45, kind of watch out, run for the hills, because if it runs about 45, it did hit above 45 on April 9th and then came back down to 38, and now it's pushing back up. So if this can push back up, get rejected, come back down to 40, I'll be happy. I'm not looking for it to go down to 29 or 30 or anything like that. I'm just looking for it to kind of come down to like the 39, 40 area on XOP, just kind of another oil play essentially. So that's what I'm looking for at XOP. We'll see what happens. Netflix totally destroyed earnings. Things went crazy. However, they're back to flat right now. We'll see where they're open up, and Chipotle as well. If anyone traded Chipotle, I did have a debit spread on for Chipotle, but it was a small position. I'm definitely not down 346 because my max loss here on a debit spread is 196. As you can see here, my cost is 196. So when at the debit spread, your max loss is your cost, and my max loss is 196. So I'm gonna be down $196 tomorrow because Chipotle really took off. CMG is up, so we're gonna have probably a little bit of a red open tomorrow. Thankfully, I've made pretty good money so far today, and we're gonna have the day trader way out of this and kind of see where we can offset our losses. Will oil offset our losses on Snap and Chipotle? it's kind of hard to say, but those are really the only trades that I have going on right now. Chipotle earnings, driving digital sales up 81%. Same store sales rose 3.3%. However, their overall transactions fell 1.4%, which is not that big of a deal. They're saying the strategy is paying off for Chipotle's digital sales grew 81%, with March digital sales more than doubling as company shifted its marketing once states began advising residents to stay home. March same. Now this is the interesting part for Chipotle. March same store sales plunged 16% after 2 months of double-digit growth. The chain hit its low point during the week ended March 29th. So it's going to be interesting to see how it digests this news and how next quarter is going to impact, because March was only 2 weeks into really the coronavirus shutdown. However, if we're looking ahead here, for Domino's, we might be able to put a position on Domino's, probably a bullish position on Domino's tomorrow because of those key drivers that drove Chipotle up. So if I'm looking at Domino's has been relatively flat this week. They have earnings Thursday before market open, so maybe looking to do a small play on here. Not looking to go too big because this chart doesn't look as friendly. It looks like a chart that's going to rip your face off. But however, there's a good chance we could gap up above this resistance here, which would set it off possibly for like a short squeeze or it to ramp up above 400. So that would be ideal for getting long in. So we'll see what happens. If you watch this video to the end, comment below, watch to the end, hit the like button, and as always, stay safe, stay green. It's us versus herd.